Dear student, Assalamu alaikum. I hope all of you are fine by the grace of Almighty Allah. Dear student, I am Mohammad Shah Jahan, Assistant Professor, Department of Accounting, Milestone College, Uttara, Dhaka. Dear student, today we will discuss on chapter 8 and it is accounting for tangible and intangible asset. Dear student, this is our second lecture on this chapter. Dear student, all of you know that in the first lecture we have discussed about the rules, regulation, formula, how you can do these types of math. Dear student, after this lecture, you will be able to find the amount of depreciation. You can give necessary journal entries. You can prepare machine account, depreciation account, and accumulated depreciation account. Dear student, let's take a practical problem. Dear student, we are taking a math from Nafis Enterprise. They purchase a machine for 15 lakh on July 1, 2015, and its import duty, freight cost, and installation charges are 2 lakh 10,000 and 90,000 and 15,000, 1 lakh 50,000 respectively. It is assumed that the estimated life of the machine is 10 years and its scrap value is taka 1 lakh 50,000 and the accounting year ends at 31st December. Dear student, requirement is find the amount of depreciation under reducing method, give journal entries, prepare machine account, depreciation account and accumulated depreciation account. Dear student, before calculating the amount of depreciation, we have to find the value of asset. If you can remember, we have discussed value of asset, that means depreciated value of asset. It is, look at the machine is 15 lakh, the cost price of machine is 15 lakh. Then for this machine we expend freight cost 90,000, installation charge, import duty 2 lakh 10,000, freight 90,000 and installation charge 1 lakh 50,000. That means this cost also will included with the cost of asset. Then we will get the depreciable value. Dear student, again I am telling, keep it in mind, for purchase of any asset, we discussed these things in class 9-10 also, dear student. For purchase of any asset, the cost of asset plus whatever other expenditure, all will be included the cost of asset, that is depreciable price of that asset. Dear student, look at the math. Depreciable value of machine, purchase price plus other dead expenses. This is the formula, purchase price plus other dead expenses for this machine. Look at purchase price 15 lakh and other expenses 2 lakh 10, 19 and 1 lakh 50. That means 19 lakh 50,000 is the total depreciable value of machine. Dear student, and if we see that in this math, in anywhere there is no rate of depreciation. Dear student, all of you know that last class we have discussed how you can find the rate of depreciation. The rate of depreciation is, look at the formula, rate of depreciation. Dear student, be careful. We are doing math under reducing method. Rate of depreciation 100 divided by estimated life into 100 divided by estimated life into 2 and then into 100. Dear student, 100 divided by estimated life into 2 into 100. This is the formula of depreciation under reducing method. So this is 100, this is formula and estimated life. Look at in the question, the estimated value of this asset is 10 years. So 100 divided by 10 into 2, that means 20%. This 100 it is for percentage, 20%. We have 20% depreciation rate. Dear student, again I am telling the formula, 100 divided by estimated life into 2. If we omit these two, then it is the formula of reducing method. It is the formula of reducing method. Straight line method. Rate of depreciation under reducing method or diminishing balance method is 100 divided by estimated life into 2 and this 100 for percentage. Okay. So dear student, two things we have learned from here. At first, how we can calculate the rate of depreciation, then depreciable value. Now our requirement is calculate the amount of depreciation under reducing balance method. Dear student, For calculation depreciation under reducing method, we need to prepare a depreciation table. Look at first you have to write, we purchased this machine 2015 and the opening value 19 lakh 50,000. It is depreciable value 19 lakh 50,000. Then rate is 20% we have calculated and we use 6 months. Why it is 6 months? Dear student, look at the purchase date. We purchased this machine July 1. That means July, August, September, October, November, December. That means this 6 months we use this machine. So for 2015 we have to charge depreciation for 6 months. So calculation is 19 lakh 50,000. It is depreciable value of machine into 20%. 20% means 0.20 into 6 by 12 into 6 by 12 because it is for 6 months. It is for 6 months. If we calculate this one, this will be for 1 year. This will be for 1 year and into 6 by 12, then it will be for 6 months. It will be for 6 months. Dear student, then the value will be 1,95,000. 1,95,000. Now closing value. What is closing value? Opening value minus current year depreciation. Opening value minus current year depreciation. Then it is closing value. That means this is depreciable value for next year. So 2016 it is 17 lakh 55,000 machine we have and rate of depreciation is 20%. Earlier we have calculated and this year we use this machine for whole year. So here no 6 by 12 17 lakh 55,000 into 20%, that means 3 lakh 51,000. It is depreciation for 2016. And closing value, again I am telling the formula, opening value minus depreciation. Dear student, take your calculator, opening value minus depreciation, then it is the closing value, so then it is depreciable value for next year. And for the 2017, now it is the opening value 14 lakh 4,000 and 20% is the rate for 1 year. The amount is 2 lakh 80,800 and this is the closing value. This way it will going on for 10 years. Dear student, I hope you understand how you can prepare depreciation table under reducing balance method. Every year the balance is reducing. That's why it is called reducing or diminishing balance. Dear student, I hope all of you understand. Now journal. How you can prepare journal? Dear student, last class I have given the fixed journal for this. If you buy any asset account debit and bank account credit. That means whatever asset here it is machine. If it is furniture account. If it is building account. Whatever asset we have purchased, the journal is that asset account debit, bank account credit. Look at the value. It is 19 lakh 50,000. Dear student, be careful. Student may make here because cost price is 15 lakh, but actually it is not 15 lakh. We have paid 2 lakh 10,000 for import duty, 90,000 for freight and 1 lakh 15,000 for installation charge. That's why total cost of machine is 19 lakh 50,000. 19 lakh 50,000. So you have to write 19 lakh 50,000. For this machine at July 1 we have expense 15 lakh 19 lakh 50,000, and you know that machine is an asset. If asset increase it is debit and bank is our another asset, it is decreases, so bank account credit. So I hope you understand first journal. Then at 31st December we charge depreciation. For charging depreciation, journal is depreciation debit, accumulated depreciation credit. You know that depreciation is an expense, so expense account will be debit and accumulated it is a fund, so fund account will be credited. For in 910 also you have learned this depreciation debit, accumulated depreciation credit. So the amount will be 1,95,000, not 19 lakh 50,000, 1,95,000, 1,95,000. Depreciation debit, accumulated depreciation credit amount is 1,95,000. Depreciation account debit, accumulated depreciation credit. Then next journal, income statement debit, depreciation account credit to close depreciation. That means we have to charge depreciation in income statement. You know that in financial statement chapter we have learned all depreciation will be operating expenses in the income statement. So income statement debit and depreciation credit. That means this depreciation account is closed by these entries, income statement debit and depreciation account credit. So this year the journal is over, and dear student, you know that every year same journal we have to repeat. So now journal for 2016. Look at here, no machine account because no new machine we have purchased. So whatever machine we have, that will continue. So in 16 we don't have any new machine, just we have two journal, depreciation account debit, accumulated